Have you ever wondered how an idea, born from an anonymous creator during a global crisis, could spark a financial revolution? This is the story of Bitcoin, the world's first decentralized digital currency, and how it went from being worth virtually nothing to challenging the very foundations of finance. Our story begins in 2008. The world was in chaos. A massive financial crisis was unfolding. Major banks were collapsing, and trust in the traditional financial system was at an all-time low. People were losing their homes, their savings, their faith. In this climate of distrust and uncertainty, a demand for an alternative was growing louder every day. Then, on October 31st, 2008, a mysterious figure using the name Satoshi Nakamoto published a 9-page document online. It was titled Bitcoin, a peer-to-peer electronic cash system. To this day, no one knows the true identity of Satoshi Nakamoto. It could be a person, a group, we just don't know. This mystery is only added to Bitcoin's legendary status. The white paper proposed something radical, a new form of money that didn't rely on governments or banks. Instead, it was secured by mathematics and cryptography, run on a distributed network of computers across the globe. It was a currency for the people, by the people, designed to be transparent, secure, and free from central control. A few months later, on January 3, 2009, the Bitcoin network officially came to life. Satoshi Nakamoto mined the very first block of transactions, known as the Genesis block, and within that block, a hidden message was embedded. A headline from that day's newspaper, The Times, 3 Jan 2009, Chancellor on brink of second bailout for banks. This wasn't just a time stamp. It was a powerful statement, a permanent reminder of why Bitcoin was created as an answer to a failing system. In its earliest days, Bitcoin had no real monetary value. It was a hobby project for a small, passionate group of cryptographers, programmers, and cypherpunks who were captivated by the idea of decentralized money. They would mine new coins using their personal computers, more for the intellectual challenge than for any financial gain. The first ever real-world transaction using Bitcoin happened on May 22, 2010. A programmer named Laszlo Hanyecz famously offered to pay 10,000 Bitcoins for 2 pizzas. Someone took him up on the offer. At the time, it was just a quirky experiment. But those 10,000 Bitcoins spent on 2 pizzas would one day be worth hundreds of millions of dollars, forever marking that day as Bitcoin Pizza Day. Slowly but surely, the word started to spread. Bitcoin began to appear in online forums, niche marketplaces, and discussions among tech enthusiasts and libertarians who believed in its potential. Small, rudimentary exchanges started popping up, allowing people to trade Bitcoin for traditional currencies like the US dollar for the very first time. The price began to climb, from fractions of a cent to a few cents, and then a major milestone. In February 2011, Bitcoin reached parity with the US dollar. 1 Bitcoin was officially worth $1. For the small community of believers, this was a monumental moment. It proved that this digital experiment could have real-world value. Of course, the mainstream financial world paid no attention. To them, Bitcoin was a weird internet toy, a curiosity at best, and certainly not a serious asset. But while Wall Street scoffed, the believers were hard at work, convinced they were building the future of money. As interest grew, so did the competition. Mining Bitcoin on a regular home computer was no longer efficient. The network's difficulty was increasing, and miners transitioned to more powerful hardware first, using gaming graphics cards, or GPUs, and then eventually the highly specialized machines called ASICs, designed for the single purpose of mining Bitcoin. This turned Bitcoin mining from a hobby into a competitive global industry, with massive data centers or mining farms humming with activity around the clock. Bitcoin's fame continued to grow. More users joined the network, more developers contributed to its open-source code, and the media began to take notice. Headlines started appearing, some curious, some skeptical, but all of them putting Bitcoin in the public eye. This newfound attention also brought tension. governments and regulators started to get nervous. Here was a global financial network that they couldn't control, couldn't shut down, and couldn't easily regulate. But this resistance only made Bitcoin more intriguing to the public. It reinforced its image as an unstoppable force for financial freedom. Then came 2013, a year of explosive growth. The price soared, capturing the world's imagination. For the first time, Bitcoin surpassed a $1,000 mark. But this rapid rise was followed by a major setback. The largest Bitcoin exchange at the time, Mt. Gox, which handled over 70% of all transactions, suddenly collapsed after a massive hack. Hundreds of thousands of Bitcoins were lost, and public confidence was shattered. Many declared Bitcoin dead. But they were wrong. The Mt. Gox disaster, while painful, ultimately made the ecosystem stronger. It served as a harsh lesson, forcing the community to focus on better security, more reliable exchanges, and safer ways to store coins. A new wave of innovation began. Entrepreneurs and developers built better wallets, more secure exchanges, and platforms designed for serious investors. Venture capital firms, seeing the long-term potential, started pouring millions of dollars into this emerging industry. The period from 2016 to 2017 was when Bitcoin truly went mainstream. It was no longer a niche topic for tech forums. It was on the front page of newspapers, featured on evening news broadcasts, and debated by financial analysts worldwide. This wave of hype culminated in the legendary bull run of December 2017, when Bitcoin's price skyrocketed to nearly $20,000. Suddenly, everyone was talking about it. Your friends, your family, your colleagues, Bitcoin had achieved global awareness. But what goes up must come down. The price crashed, leading to a long and difficult crypto winter. Skeptics once again rushed to write Bitcoin's obituary. But they missed the point. Bitcoin has always been volatile. It has survived multiple crashes, bear markets, and waves of negative press. And each time it has emerged stronger, more resilient, and more antifragile. Each crisis has led to new development, better regulation, and fresh innovation. The real turning point came in 2020 and 2021. The narrative began to shift. It was no longer just retail investors and tech idealists. Now, major institutional players were entering the game. Hedge funds, asset managers, and even publicly traded companies like Tesla and MicroStrategy began adding Bitcoin to their balance sheets. For the first time, Wall Street wasn't laughing. In fact, they were buying. Major banks, which had once dismissed Bitcoin, were now creating crypto trading desks and offering services to their clients. Governments started to acknowledge that Bitcoin was an asset class that was here to stay. In November 2021, Bitcoin reached its all-time high of over $69,000. Creating incredible wealth for its early adopters and solidifying its status as a legitimate global asset. Millions of people around the world now see Bitcoin not just as a currency, but as digital gold, a store of value that is scarce, durable, and immune to inflation. Bitcoin has become more than just technology. It's a movement. It's a symbol of financial sovereignty, a peaceful protest against a system many feel has failed them. And its story is still being written. The journey continues with new innovations like the Lightning Network, designed to make transactions faster and cheaper, and second-layer solutions that expand its capabilities. Global adoption is growing every day. From a single idea published in a white paper during a financial crisis, born from a mysterious creator, Bitcoin has grown into a trillion-dollar asset discussed in every major financial institution on the planet. Its journey has been wild, volatile, and revolutionary, and it is far from over. Thank you for watching. If you found this story fascinating, don't forget to like, subscribe, and follow for more.